It's Wednesday, December 12th. Welcome to Market Foolery. I'm Chris Hill. Joining me in studio today from Motley Fool Pro, Bryan Hinmon, and from Motley Fool Inside Value, Joe Magyer. Happy Wednesday, guys.
Happy Wednesday.
It's 12/12/12. It's the date. You go on the internet, people are just all excited because that's the date today, 12/12/12. You can just feel the excitement in the air, can't you?
I noticed it and was like, I bet a lot of people are going to talk about this on Twitter.
Let's be clear. This is not as big as the Mayan calendar date, which is coming in, in 9 days or something, 9 or 10 days when the world ends?
If I could buy puts on the Mayan calendar jokes, it would be my biggest position.
You say
I'm
that.
extremely bearish.
They might trade that on InTrade, Joe. Check it out.
They might.
You say that now, but just for our dozens of listeners, this may be one of the last market fooleries we do if the Mayans were right. We're going to talk Facebook, we're going to talk Costco, we're going to talk Twitter, but we're going to start with Berkshire Hathaway. Berkshire Hathaway announced this morning that it had bought back $1.2 billion worth of its own stock, and shares are up about 2.5% this morning on the news. Joe, we had talked, I guess it was earlier this year, that the board of directors had authorized this buyback plan where they could essentially just pull the trigger. Buffett could pull the trigger, or any of his lieutenants, if the stock was...
Or successors.
It was at 100% of book value. They've now updated that and approved it for up to 120% of book value.
Yeah, so they moved it from 1.1 or 110 to 120, which may not sound like much, and in the grand scheme of things, it's not a huge deal. Over 5 to 10 years, where the value as an investor is really going to come in is on Berkshire's earnings and how well they grow those. Still, it does set somewhat of a floor on the stock price. That's why the stock moved to $89, which is the 1.2 number for the Class B shares, which are not like the $111,000 shares, which I'm assuming most of our listeners don't own. I don't own those. I'm in the B share category.
Yeah.
There are two types of people.
Oh, sure. If I had $134,000 to pick up an A share of Berkshire Hathaway, sure, I'd do that.
You're a little more.
And
in
you'd
the
wear it as a
1%
badge
or the 1%.
or a necklace.
You get a gold chain. Anyway, yeah, it was welcome news. I mean, the stock was selling a little bit below that. There's a trade-off with it. I think 1.2 is a very good price to buy back the shares. I think they're worth about $111. So right now you're looking at basically $22 of upside versus $0 of downside to the price Buffett would buy back. That's pretty good range of outcomes, and this is a growing intrinsic value. The problem is that it also kind of anchors investors around the 1.2 number. So a lot of people see that. I was arguing with Ron Gross from MDP about this yesterday, and he sees it as basically a price that, this is the price Buffett would buy, so why should I hold out and buy shares myself at above this price? And we kind of go round and round on the logic of that, but there are a lot of investors who think that way.
And let's be clear here. I think, Buffett is a cheapskate. And so even though he's raising his bar to 1.2 times book value, I bet he's still thinking that he'd rather buy the shares at 1.1 times book value.
Sure.
He just wanted to add a little bit of flexibility to his process. I mean, he's throwing around such large sums of money that it doesn't take much likely to cross the threshold on the bad side. So he's just giving himself a little more breathing room, but he's probably going to hold out for 1.1 and buy up to 1.2.
As we've talked about a bunch of times in this room, a lot of companies screw this up when it comes, stock buybacks. A lot of companies, you just go back and look at the numbers and they blow it in terms of buying at the wrong time. Why wouldn't a company employ this type of model, whether it's Markel, which is sort of the baby Berkshire Hathaway, or just any run-of-the-mill company like Hewlett-Packard, which among its many problems has screwed up stock buybacks plenty of times in the past? Why wouldn't any company set up this type of plan that basically says this is the floor, this is the ceiling, and it seems like it would take the randomness out of it?
It would, but it would also take control out of the hands of the managers who are making the decision. So part of the value of, also most companies lack the discipline to do that. So, and the balance sheet strength, which Berkshire has in spades, $47 billion in cash.
Right.
That's a lot of wiggle room. What Berkshire also brings to the table, and what's unique about this, is that it's an open-ended buyback that kind of goes in perpetuity. And part of the rationale there is that if Buffett were to get hit by a bus or have to step aside, that his successors coming in would have a benchmark of what a good price to buy back is, and that would be a Buffett-blessed purchase. Another way to think about that is insurance companies are somewhat easier, and we could Berkshire isn't really an insurance company in a pure sense anymore.
Right.
But you can work off of some sense of book value as a magnet to use for valuing it. Whereas if you're looking at HP, book value is almost completely irrelevant when valuing that company. With an insurer, there's a lot more grounded basis for that. So if you're looking at something with HP, you're going to have a lot more difficult time finding a trusty long-term benchmark that you can rely upon to use.
Just to wrap up on Berkshire Hathaway, you still like the stock at the price it's at now. I mean, and I should say you're being quite modest, and not that I would expect otherwise, but you've been saying from the start of this buyback plan, you've been a total bull on the plan itself, and you've been saying for months this stock is absolutely a buy. But I'm assuming that's not going to change.
No, I'm a huge fan, and it's my biggest personal position, like 4 times over.
Yeah, I own the shares too, and I think this is a great stock right now for investors who are looking to generate some income to write puts around this sort of low water mark or the mark that Buffett has put out there, about $90 a share. Worst case scenario with writing puts is you put the shares and you own them. Well, we've already said that we don't think that's a bad thing to happen. So if demand returns for the stock and it's above $90 a share, you can just keep that option income and do that several months over.
Yeah, and just to reiterate one last thing is that it's easy to get into like the knick-knack 5-10% changes in the stock price, but over the long term, that's not where the value is going to come from. It really will be through the operating companies growing and Buffett's reinvesting at high rates like he has for a long time.
This morning, Facebook replaced Infosys, the technology consulting company, in the NASDAQ 100 index. Bryan, I see stories like this, and I automatically think this is a great thing for, maybe not a great thing, but I look at this as an automatic net plus for a company, and yet shares of Facebook down slightly today. Let's talk about Facebook first. Do you think it's automatically a net plus? And if so, what's going on at Facebook?
So I don't think it's an automatic net plus for Facebook. If you look back at the academic research on this, generally speaking...
Let's assume for the sake of argument I haven't.
Let me summarize it for you, Chris. Generally speaking, there's a short-term price impact, a long-term price impact, and then a liquidity impact. The short-term price impact is generally positive for additions and negative for deletions, and you get this for reasons you'd expect, right? There's heightened investor awareness about a stock that's coming into an index, as well as there's a lot of buying into that stock by index funds or funds who closely track the index, so it creates demand. There's actually a surprising long-term price impact in that it tends to be beneficially lasting for additions, but not so for deletions. And then all-around liquidity is improved. The problem here with this, why this isn't an automatic win for Facebook is who doesn't know about Facebook, right? It's already an enormous company. It already is under the microscope. And so there is no new information that the market is trying to incorporate, just knowing that Facebook is joining an index.
Yeah, and a lot of what we're talking about here is on the technical side of the investment. It has nothing to do with the business itself and how well it's performing. So, there are plenty of companies that have been added to indices that went on to choke.
Yeah.
Right.
And what's interesting is, in order to be added to the NASDAQ 100, your stock and company have to meet several requirements. They
Right.
have to be of a certain size. They have to have trading volume. Another one is they have to have lived on the index for 2 years or at least 1 year. It's interesting that NASDAQ is choosing to waive that.
I was just going to say,
Facebook
they just decided to waive that just to put Facebook in the club?
because it's Facebook. Yep.
I think that makes sense, given the size of the company.
Yeah, it's interesting. So Infosys is getting knocked out because they're transferring to the NYSE. But Facebook is going to enter the index as the 8th largest company by market cap.
On the index.
Yeah, pretty remarkable.
By the way, I was looking at the NASDAQ 100, and we talk about index funds all the time, but a lot of time when we refer to index funds, we're just broadly referring to the S&P 500 index fund. You can buy a Dow fund. You can buy a NASDAQ composite fund.
They're indices for virtually everything.
The NASDAQ 100 as an index has just crushed those others over the last, pick your time frame, 1, 2, 5 years. It's been It's been tremendous. I guess my question is, why haven't you guys told me about the NASDAQ 100?
Well, there's definitely an Apple bias in there that has been driving that.
Yeah, Apple's the largest constituent. It's about 18.5% of the index. So
Good Lord,
the,
really?
yeah, the NASDAQ 100.
So it's nice and diverse.
The NASDAQ 100 is the 100 largest non-financial companies that trade on the NASDAQ. So by removing financials, you remove much of the financial, meltdown that we had.
Yep.
And then it's by and large tech heavy. And so, Chris, you know that I always like to bring in a piece of random trivia
Sure.
when we talk about obscure things like the NASDAQ 100 index. So here it goes. There are 26 letters in our alphabet. You are familiar with them?
Most of them, sure.
All right. So 25 of those 26 letters are represented within those 100 company, the first letter of their names.
Okay.
So what letter does not have a company name that starts with that letter?
So
in the
100
NASDAQ
companies in the NASDAQ 100. The first letter of those companies, we got 25 of the 26.
What is the one that is not present?
I'm going to go with, it's probably not this, but I'll go with Q. Joe, what do you think?
Why?
It is Z.
Really?
Really?
They're not going to waive it for
Qualcomm.
They're not going to waive it for Zillow?
You know what's funny? My first thought was Zillow, and I was like, there's probably more Z's, so I just moved on.
Costco's first quarter profit rose 30%. Joe, same-store sales up 7%. All the headlines look good here, and yet Costco's stock is basically flat today.
Yeah.
Is that because it's just had a great run and it's kind of richly valued?
Yeah, that's the thing. I mean, it's a great business. We love this business here at The Fool. The issue is that it's priced that way. So on a forward PE basis, it has a 60% higher PE than the S&P 500. So another way to think of that is it better do 60% better than your average big cap company. These are great results. No one's complaining, but they're just going to have to keep delivering to justify that stock price.
Bryan, one of the things that Costco said on the call, the CFO said that the membership increase fee, the fee increase has basically had no negative effect. And yet when you look at the coverage today, it seems like there were people who were expecting more revenue out of that membership base as a result of that. Is that an area of concern, or is that we're just looking for things to complain about in the analyst world?
Yeah, you're just nitpicking at that point. Let me frame that up. So last year, Costco raised its membership rate by its regular membership rate by $5 to about $55, I think it is now.
Yeah, went from 50 to 55.
And it's done this. I think this is the third time that they raised it over the past decade or so. So, that sort of just is in line with their general strategy of trying their darndest at all costs to lower the costs for their customers. And, Wall Street analysts like profits, and they like profits today. And Costco has essentially said, we were talking about this before the show, Costco has essentially said, we think it is better for us long term to pass along cost savings. And over time, we will amass more customers. They will, be incredibly loyal, and they'll buy other things from us. And the profits will trickle in over time. So it's Wall Street saying, I want it now. I want the Oompa Loompa now. And it's Costco saying, we'll get it eventually, but let us run our own strategy.
I think we all want an Oompa Loompa now.
A whole pack of them.
There was news locally here in the D.C. area a couple of weeks ago. Vice President Biden showed up at the opening of the new Costco in Washington, D.C. It's the first one within Washington, D.C. proper. When you guys look at the business of Costco and the locations that they have, in the U.S., they've got about 450 locations. Is that something you'd like to see them ramp up in a significant way, or is this just one of those things where, kind of like the price increases, we should just sit back and just trust that they're going to continue on a reasonable path? Because it seems to me like they could be a little bit more aggressive in terms of opening up more locations, at least here in the U.S.
Yeah, well, I'm sure they could. I mean, the trouble with cities is that it's not really the target demographic. Speaking as someone who lives in downtown D.C., you got a lot of people who walk. You do light shopping. You don't go buy 40 pounds of mayonnaise and carry it on your back to get home. I mean, kidding aside, it's just a different clientele of shopper than what you've got out in the suburbs. So Costco's already pretty well covered that target demographic of upper middle class families who have 2.5 kids at home and buy a lot of ribs.
Yeah, there are also.
I love ribs. I'm not
there are
criticizing.
also storage issues, right? So, we generally have smaller homes in cities.
Yeah.
So that that's a very real constraint, like Joe is talking about. Costco knows what they're doing. They have operated at a controlled, growth rate for years. Because of that, also because they're generally conservatively managed and because they like to buy the property in which they construct their stores. So I see no reason for them to deviate that. They're growing a little more quickly internationally, so just let them keep doing what they're doing.
Is it a fairly valued stock, Joe, or is it kind of on the rich side?
I think it's bleeding into the rich side, slightly fairly valued. Most of the guys in the office really like the stock here, and we'll just disagree on that, but I do think it's a wonderful business.
Was that another thing you and Ron Gross argued about yesterday?
Yeah, it's among the many. But yes, I do think it's slightly overvalued, but I don't think you're going to go wrong owning such a well-run business over the long term.
Let's wrap up with a private company, and that's Twitter, because the Pope is now on Twitter. Pope Benedict XVI is on Twitter, and today he started tweeting. He's got 5 tweets out, which is, I don't think I've put out 5. You're on Twitter, Joe. What's your Twitter handle?
Magyer, Magyer.
And Bryan, yours?
At Bryan Hinmon.
At Bryan Hinmon. And you can follow us at MarketFoolery. And I'm on there as well, TMF Chris Hill. But the Pope on Twitter, what do we think of this? Because I'm sort of torn. On the one hand, I think, oh, sure, why not have the Pope on Twitter? And yet it has that feeling of, oh, my grandparents just joined Facebook, and now Facebook is less cool as a result of that.
Well, the Pope's probably older than your grandparents, for one thing. I think it's awesome. I love that he's reaching out to, people around the world in a medium that they can connect to and understand, and especially young people. I think it's great.
Ryan, what do you think?
No, I completely agree with that. I mean, let's be clear. I'm pretty sure this is not his brainchild, but nonetheless, he'll be, walking around the Vatican, spouting off inevitably snippets that are less than 140
OMG,
characters.
we're out of holy water.
And someone, his assistant will be there to sort of, snap those up, translate them into 15 languages, and send them out. I mean, what a great tool to reach, people who have cell phones, but have no other, way to get cued in on that.
What are the odds that the Pope is going to retweet something? Like that's what I'm looking for. Of course, I mean, tweet whatever you want, but that's
he's not following anyone.
Yes, and that's probably appropriate.
I would say in the structure of their belief system, that's appropriate.
Although, how great would that be if you're like, yeah, I only have 17 followers, but one of them is the Pope? Like that would just...
It would be pretty cool.
Yeah, one word of advice to the Pope or the Pope's Twitter handler.
Oh, I'm sure they're listening.
I'm sure they are too. Do figure out how to turn off your email alerts, because you are going to be inundated with announcements, and it will crash the entire sort of bandwidth.
The Vatican is down.
The Pope is the Pope's been on Twitter for a very short amount of time, and is already closing in on 1 million followers. So yeah, they probably sussed that out ahead of time. But good tip. If you're listening in Vatican City, you can always drop us an email, radio@fool.com. Bryan Hinmon, Joe Magyer. Guys, thanks for being here.
Thank you.
As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. That's it for this edition of Market Foolery. Our producer is Matt Greer. I'm Chris Hill. Thanks for listening. We'll see you tomorrow.